Well, hey there, everyone. Today is Wednesday, October 8th, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. My name is Raleigh White, and I'm coming to you live from a beautiful day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger's going to be covering a range of important topics with a continued focus on the Pro Trader Dashboard. In today's session, he's going to talk about combining Pro Trader Dashboard scans with daily charts to find stocks that are buzzing. Secondly, he's going to share with us how to figure out whether to use a debit spread or a credit spread and how to do that. He's also going to share his favorite midday shorts and longs, and Kane's going to be joining us, and he's going to share with us how he finds opportunities, and then as a special bonus, Roger and Kane will be comparing their option picks. That's going to be great. Now, if you have any questions during Roger's presentation, please type them in the chat window, and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Also, folks, remember that the chat is open to everyone, so remember the ground rules. Be kind, keep to the topic, no political discussions whatsoever, and please, please, please keep your side conversations to a minimum so that the rest of us can focus on the education and information that Roger is sharing. Because remember, folks, he is here and he's giving us an edge and trying to help us become more confident and consistent in our trading activities. Well, once again, for those of you that did join us today at 8 o'clock Eastern Time for Roger's pre-market opening show, well, today's catalyst, the focus was on transportation since FedEx was down about 2% coming into the open. On tech side, AMD continues to sparkle. It's up 1% pre-market. And then on the Fed, well, we have a crude oil report that was coming out this morning. We have FOMC minutes that are being released that are going to be a key focus item. And then we have several FOMC members that are going to be speaking. On the small cap watch list, we note that Roger gave us 6 to take a look at, and with the recommended entry levels, and I can tell you at this point in time, I'm going to switch my share here so that you can see my screen. You can see that on each one of these stocks, let's start right up here, XB ID, we can see that its level, pre-market level is 25.51, has not even come close. On NERV, the pre-market level was $5.36, has not come close. XTLB, same thing, 665, has not come close. We're looking at UPC here, also at $15.39, has not come close. Neither has ACXP or BGMS. Now remember, folks, when Roger goes ahead and provides this information to us, the key thing in these small caps is not only price action, but he's looking for extreme volume. I'm talking about 100 times volume than what's normally there. And that has to be there pre-market for him to become interested in it. And also, folks, remember that if you considered any of these trades, you only want to trade them when the market opens. That's area in white here. And you also, if you don't hit these levels by 2 p.m. Eastern time, forget about the trade. It's not worth it at that point. And if you ever do get into one of these trades, please never hold them overnight. You'll never be happy with the result of doing that. So exactly right, Kairos. No soup from the small caps today. And Roger talked about that this morning. He said, hey, these aren't guaranteed to be winners, but when they hit, and I'm estimating they hit maybe about 10% of the time, they really take off. They'll come up into the order, and we expect in the early hours of the trading that they're going to shoot up pretty high, take advantage of the pre-market movement, and give you a quick in and out. But outside of that, it's not worth messing with it. So let me go back to my other screen here. And I like that, guys. No soup on the small caps. As far as Roger's pre-market stock wish list is concerned, once again, and before the markets are open, he basically takes a look at what's going on, and he recommended about 6 or 7 short stocks. Those with asterisks here, folks, mean that these are potential A-line setups. The other stocks are also good, they just don't meet the A-line criteria that Roger likes to trade. And so we saw 2 of those in the shorts, and we saw 2 of those on the longs, ABBV and HWM. So this is what his pre-market watch list was concerned. And at this point in time, as you know, you're here for the midday. Roger's probably going to give us an update as to what his favorite songs, shorts, and longs are at midday today. And I wouldn't be surprised if some of these pre-market tickers are also on his midday list. As far as Roger's pre-market comments are concerned, he said, look, guys, coming into the markets are somewhat random, but looking pretty good into the open. Once again, kind of a tepid response there, but still looking good. He noted that the bonds were up, and they were in fact breaking out of a descending triangle. We talked about that yesterday. He showed where bonds are within this descending triangle, and his concern was if it breaks below that, woo, Katie bar the door. But actually, coming in, we had a full bar closing above that, so perhaps we're going to see some consolidation into that range and a bit move higher. We also noticed that the US dollar was breaking out above its range, and gold was at record highs. He also noted that the markets don't appear to be overextended like they were just yesterday and for the past couple of weeks, and they appeared to be just resting and consolidating at the 8 EMA, and he says that's a good thing. So for the markets to go higher, he wanted to see a retracement back to the 8-day EMA, and then from that perspective, a period of consolidation before then moving higher. That's what he's hoping. He also noted from a red flag perspective that the VIX remains above the 50-day moving average. And why is that a red flag? Because once again, with the way the markets have been moving higher, he expected that the VIX was going to move, lower basically at the same rate, but it hasn't. It's been stuck right there above the 50-day moving average, and that's a little bit of a red flag for him. And he also noticed that the sectors are still in flux, and what he means by that is that they're defensive sectors at the top of the list, and particularly real estate and utilities, and he doesn't associate that with a healthy move in the markets. He'd like to see more tech sectors and things of that nature that are more speculative up in the sector list to support a potential move higher. So bottom line, he expected the markets to be kind of quiet today. We had a rundown yesterday, and he says, hey, when you see that kind of a rundown, the next day typically is kind of quiet and consolidated before moving higher. And without any real significant catalyst in the market to drive things, once again, just expected things to be pretty quiet. So as far as today's agenda is concerned, folks, this will be like sort of an ongoing discussion about the ProTrader dashboard. He's going to be sharing how to combine the ProTrader dashboard scans and daily charts to find buzzing stocks. Man, that'd be great to see how he does that. He's also going to share with us how to figure out debit spreads and credit spreads, when to use them, and how he likes to set them up. He's going to share his favorite midday shorts and longs, so this will be an update over what he did pre-market on his shorts and his longs. We also have Kane joining us today, and he's going to also share with us how he likes to find opportunities and the tools that he has for that. And then as a bonus, Roger and Kane are going to compare their option picks. So yes, they're going to pick some stocks, and they're going to look at the option setups, and they're going to compare how they do it. And it's always fun when these guys go head to head on that. So, and some other things just to remind people of during the session. If you've got any questions during Roger's presentation, just type them in the chat window, and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Basically, the chat will be closed to Roger. I'll keep a track of what's going on, and then periodically we'll feed him questions so that we can keep some pace in the presentation. Also remember, folks, that the chat is open to everyone, and we do have some ground rules. Be kind, keep to the topic, no political discussions whatsoever. Also, please keep your side conversations to a minimum so that the rest of us can focus on the education and the information that Roger's going to be sharing with us, because after all, folks, he's here to give us an edge and to help us all become more confident and consistent in our trading. So with that, folks, let's get ready to rock and roll. I note that we have the team here. Hey there, Matt. Nice to see you, buddy. You're keenly focused on the markets. Anything you've seen so far today?
I, I'm a little surprised how fast we've gotten to the high, but I'm not sad about it.
Good, 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 good. Kane, excellent to see you joining us from the West Coast. Looking frisky?
Yeah, market. I'm always happy when we get a chance at the market. So,
Absolutely. And Roger, great to see you, buddy. We just did a little bit of a wrap up from this morning. You basically expected that things are going to be kind of quiet. There's just no real catalyst in the market. We're kind of the day after a rundown. And so things pretty much as you've expected. Any surprises?
Just that everything's coming along a little better than I expected. Yesterday to the downside, it happened faster, and today to the upside, it's happening faster. But no surprises at all. It's kind of like everything that I expected to happen over the course of the next 4 days happened over the course of the day and a half. I prefer it this way. It's better this way. The market has a little more energy to it. No, but this is good. This is exactly what I thought. I mean, I told you guys this morning that we're not overextended anymore. We're coming up to 8-day EMA. I always say something negative. I'm always saying something really, really negative. But I was like, I don't really have anything negative to say today. Everything looks. I was like, everything's looking good. Things are looking good. The market's looking good. The momentum levels are looking reasonable. I mean, there was a couple of things that I'm not liking, but there was nothing out of this world that was shocking to me.
Exactly.
The bond market was coming back. I still would like to see volatility. Come back. And right now, what's bothering me? Let me just share my screen. I'll tell you what's. And again, these are all, I would say, secondary concerns. But let me just share my screen here real quick.
There's always something lurking out there.
There's always something. There's always something, folks. I mean, there's always something. But again, I mean, I can be pretty nitpicky too. I got to remember that too. But the fact that we're flying really high up above the 5-day point of control here, that bothers me a little bit. But we're not too far away. I mean, we're not like down here or anything. We're just a little bit above that area. And again, so I wouldn't be surprised if we were to come down here and either correct on this level, which is about 672. I mean, we're not talking about major levels here. We're at 672.66, and I'm talking about flirting more with this area, which is like a point down. So we're not really talking about anything crazy, but I wouldn't be surprised if we came into this area right here, because this is the balance area. We're kind of out of balance, and you can see there's just not a lot of price discovery here. We are near all-time highs, so there's just not much there. So I think we may be peaking out here, but again, not falling apart, but just kind of gyrating right here between this area and the 8-day EMA, right here. But yeah, notice this morning we didn't really have a big gap, Raleigh, like we've been having.
Right.
Didn't see that coming. Didn't see any of that. Seeing some really nice setups and seeing good momentum right now. Now the only thing is that I don't think if we move here for a few days, we may just start getting a little choppier, and we may kind of flatten out a little bit for a day or two, and then start coming back towards the upper end of the range. But let me take a look at mags real quick.
We had a catalyst from the International Monetary Fund this morning. They released some positive comments, and that shot us higher.
Good. So and that happened after the market opened already.
Right, it did.
Yeah. And I really like what I see right here with the mega caps. I like the fact that they're consolidating near the 8-day. If you were to put the 15-day, you would see that they're bouncing off here. But I'm really not seeing anything. Not really seeing anything really that bad. I mean, am I seeing anything amazing? Not really, but I'm not seeing anything that bad. What I would really like to see is, I'd like to see the VIX fall below 16, and I'd like to see the bond market break above 90.
Mm-hmm.
Those are the two things I would like to see. But I'm not really seeing anything bad. I mean, the Volt is coming up. It's a little choppy, but it's coming up.
Right.
ADD is not at 1200, but it's it's telling us that there are some stocks above yesterday's high. But again, I know everybody's expecting me to say something really nasty or something negative, but I really don't have anything bad to say. I like what I'm seeing. I like the market right now. As most people have realized now, why I have not been going short extensively, because the market is still hyper bullish. Somebody asked me, why aren't you going short, Roger? Because we're trading above the 8-day EMA, and we continuously keep using the 8-day, keeps coming as a support area right here. Here, let me just go back to the SPY. I mean, the 8-day just keeps supporting it. So why, let's just keep working it. And, days like this come as long as it bounces. I mean, look at this. It bounced down to a tick. And look how close today.
That's amazing.
Down to a tick. So
Yep.
This is a reason why I use these levels. They work remarkably well. If they didn't work well, I wouldn't be using them. And I sure as heck wouldn't be showing them to you live here over, thousands of people a day. I mean, they work. They work, and they work well. And I explained many times why I believe they work. I'll never be able to prove it. Maybe I will be able to prove it one day, but I believe there's a very specific reason why they work.
Sure, and you have the experience to back that up, Roger. I mean,
Yeah. Well, I also have eyes, and I could see how stocks love the 5-day lows. They really like those levels, and I think I have a theory that institutions are. Thank you, Bob. I appreciate it. Bob's doing God's work. I have a feeling that that institutions use a 5-day low, a VWAP of the 5-day low. And I've been saying that for years now, but I can't prove it. I can't prove it to anyone. So if I can't prove it, I'm not going to say it. But I think institutions like to use, and if I was an institution, I would want to use the 5-day low VWAP level as well, because if I'm a market maker, I'd want to know. I'd like to set that level. I'd like to make sure I'm not buying too far above the 5-day low. It would make perfect sense for me. But again, yeah.
And Roger, before we go on, because I know we have a lot to cover, I thought a good question came up a little bit earlier in the chat, and the question was this: with the markets basically trending up or consolidating where they are, but generally up, how confident should anybody feel like in taking a short at this point? And I know you have some particular views about that, because not all stocks move the same direction, and the shorts that you select are for very good reasons. But how about some comment on that, Roger?
Yeah, there's nothing wrong with going short right now, and I've been kind of lazy and not going short because we've had so many good potentials. But one of the reasons why I haven't been going short, and I'll show you why I haven't been going short, and I'll talk about going short. A lot of folks will not understand this, but I'm going to try to explain this the best that I can. Okay? So if you look at the number of stocks making 90-day highs, 175, but 71. You remember about 2-3 months ago, almost every day, we had okay upside momentum. Sometimes not so okay, but usually it was reasonable. But we had literally like 11 or 12 stocks breaking down. And what happens when you have 9, 10, 12 stocks, the same boring stocks breaking down and nothing's moving lower? The market won't be able to move much higher. See, the market has to do this. It has to be rhythmic.
Okay. Yep.
If the market can't go down, it won't be able to. It's like somebody throwing a basketball when it's a foot in the air. How much upside is it going to get? Hardly any. Throw a basketball from the 20th window and see what kind of upside you're going to get. You're going to get upside. But if a little child throws a basketball on the ground, 2 feet tall, the ball's going to go nowhere, and that's it. It'll be done because it doesn't have any energy. The market works the same way. It needs two-sided energy. And I told you guys this. I told you back then. I said, let's go back 3 months. 31 stocks making 31 stocks. That's nothing. If this number doesn't increase, this number can't increase. So right now we actually, and I made a comment this morning, I think either yesterday or days running.
Roger, it was this morning because there's more balance.
Yeah, I said the market's now balanced. We actually have a lot of stocks to look at. So now let me answer your question. So now I'm going to get to your question. Hey, Becky, Cyrus, Ken, Richard, Vladimir. Good afternoon, everybody. Good afternoon. So now I'm going to answer your question. So I do like shorts, but here's the problem. And a lot of people fall into this trap. There's shorts that look like this. Okay? And there's shorts that look like this. This is where Nike is right now, okay? I wouldn't be trading overextend. Shorts tend to move more aggressively than longs, so they actually have more follow through. It's harder to you know how when we're 1.5 ATR we get overdone to the upside. Well,
Right.
it's not as if I mean the shorts have some firepower. They really do have some firepower. Hey Don, Wesley, good morning, good afternoon, everybody. But one of the biggest things you don't want to do is you want to stay away when the market's making highs almost every day. You don't want to go for breakdowns. You want to go for grinders. So you want to go for stocks that look like this. You want to find stocks that look more. These look like they're all running down. They look like look how far they are from a breakdown. Quite a bit.
Yes.
Here, this would be a good example. Something like this, where I would probably want to wait for a market to go up for a day or so, hit the 8-day EMA, and then for that, let me actually see if I could find you an.
Well, and I think these are some of the attributes that you look at for the shorts that you select pre-market and midday.
Yeah, and there was actually, let me just get my TC2000 on here. This may not be a great example. This may not be a great example on a chart, but I'll show you what I'm talking about right now, so you guys can see it very clearly because I'm actually looking at it right now. So let's say that we want to short Oracle. Okay, see how Oracle's been breaking down. Okay, let's say we want to short Oracle. In this market, I wouldn't want to be shorting Oracle over here. I would want to be shorting Oracle over here. When it clips the 8-day and backs away from it, and now it's up on the day, so this is not a good example, and it's probably outperforming the market right now. But look at the chart, how it looks on the chart. Look at this pattern right here. You see this pattern? It's not breaking down hard. It's not like down here. It's more up here. So I would be shorting more I would be looking, basically what I'm trying to say is, and I'll say this in a very quick way, I would be looking for pullbacks to the short side and not breakdowns because the market's making all-time highs.
Okay.
If the market was just kind of grinding, then I would look for stocks that are holding their own to the downside that have more tailwind, which are breakdowns. But if the market's making swing highs, then it's just too dangerous to trade breakdowns because you're going to have too many false breakdowns because the market's making all-time highs. There's liquidity coming into the market. Gap is a good example. See, like I wouldn't be selling it right here. I would wait for it to hit the VWAP and then I would start looking at the 5-minute, and I would start looking for candles like this for it to wick out and start coming down below the VWAP, and then I would short it.
Then you would short it. Okay.
Yeah. But that's a good point. That's a good question and a good point.
Absolutely. Roger, thanks for that.
Yeah, not a problem. Good question and a good point. So what we learned today is that and by the way, typically I don't care breakdowns, grinders, I don't care. But right now with the market doing this almost every day, you see, okay, they're not going to understand if I leave it there. I'm going to explain, and if Kane wants, he can also explain it. See, let me explain this, folks, so you understand, okay? Markets are driven by institutions. Institutions are primarily trading individual stocks through mutual funds. Mutual funds have multiple stocks. So if I buy a share of an S&P fund, right? Okay? Okay. What are the odds of that fund having a stock that's going down? A lot, right? Because like you just said, there were like gap. I mean, give me any S&P stock that's in a. How about Reddit? How about Reddit? Okay. Or how about AMH? AMH is a perfect example. This is a grinder right here. Okay. Perfect example. So I'm a hedge fund guy. S&Ps are making all-time highs. That means a lot of money is coming into the S&P 500. money's coming into the S&P 500. It's going to come into this stock as well because this stock is in the S&P 500. So what you're doing is you're kind of shorting against a major wave. Does that make sense?
Yeah, it's interesting. Yep.
Consider a fund, okay, a value fund. It's like a net. You're going to the ocean not with a sniper rifle. You're going with a net. That's what a hedge fund does. They're going in with a net. So if they're going to press the button and accumulate more S&P related stocks, your stock that you're short like this is going to get caught in it, in that net, because it's in the S&P 500. Mm-hmm. Therefore, the reason I don't like to aggressively short moving stocks in a downtrend is because today, tomorrow, next day, we're going to get caught in that net. You understand? And I don't want to get caught in that net. When you're trading grinders, this is a grinder. You wait, this stock, you see how this stock has been going down regardless of what the market has been doing? Not on an intraday basis, but on a daily basis. So if I was to short this stock around here somewhere, assuming the stock is not breaking up on volume and all that other stuff, then the odds are my entry will be good because the stock will just continue doing what it's been doing. But if a stock is breaking down hard, the stock it basically has to have a gap and go to the downside every day against the S&P 500. Mm-hmm. That's hard. That's a hard ask. That's a hard ask. That's not statistically gonna sustain me and buy me a multi-million-dollar house. That's not an edge. Okay, Kane, do you agree with what I'm saying? Do you want to add anything to that?
Yeah, the only thing I would add is that there's a large amount of money institutionally that is trapped in funds that are long only as well. So you're not getting the institutional backing to the downside in a lot of stocks.
That's a good add. Thank you for adding that.
Yeah, excellent point.
Didn't even think of. Yes, I'm always most mutual funds folks are long only. So yes. Hedge funds can do both, but yes, and actually, the funny thing is, Kane is even more right than the more I think about it, because those would be the funds that would be buying this, that would be holding this stock long term, specifically those long only safety funds. So you're going against the flow. You're going against the flow, and again, there's nothing wrong with doing it, but try to, unless the market's just kind of not doing anything, and then the stock can kind of do its own thing. Try to get in at a more strategic spot. Because every time this breaks down, it exactly, Wes, it's like pissing in the wind. Exactly. All right, so let me give you my shorts. Kane is going to be talking a lot about his goodies today, which I'm really looking forward to hearing about. And I want to get an update from Kane about his goodies. It's been, about 3 weeks since you launched the GEX terminal?
Yep, that's about right. Yep.
Okay, I want to get all the details. So let's start with our stocks. So this is Reddit. It's not below all the averages yet, but it is breaking down. And this is a perfect example of a grinder, kind of grinding down here. That's on my short list right now. KMX is on my short list. That's actually a nice little A-line setting up right there. How it bounced off the 8-day right there too. Nice setup there. Be careful with shorts right now. Hormel, that looks pretty good. Still not overextended. Still not really outside of the bands. Notice how it's close to its compression, not too far from the 8-day EMA. Very, very important. That's a good one, Greg. That's a good one. Oh. Next one is AMH. We already talked about this one. Very, very nice looking. Very nice looking stock. 1 second, I just need to check something here. And last but not least, KEX. KEX. See, this is a perfect example. Short stock, it went down today, was negative for a few minutes, flirted with disaster, and now it's coming back up to the 8-day. Again, if you're going to be doing it, do it with grinders and do it with stocks that are coming off here. Coming off. Let's now look to the long side. I actually have quite a few for you because this is now becoming a little overextended. So this still looks good, but it needs to come to the 8-day EMA. So I'm going to set an alert for myself. This may be a good day trade today. Price action. Okay, Caterpillar looks pretty good. Hood looks really good. Matt, make a note of the ones. Yeah, write down the ones I'm telling you specifically. Hood looks really good. Remember I told you I had a good list for you, Matt? Might as well kill two birds with one stone. Giving Matt his watch list for today. GLW still looks good. This was a swing trade like a week or two ago. People were worried about it because it went down for a day and then boom. So, the key, folks, is picking the right stock. If you pick the right stock, 80% of the work is done. Right, Kane?
Absolutely. Absolutely.
Yeah. Picking the right stock. VSAT's coming back. Stock is coming back. Another stock that was on our watch list a few weeks ago. Starting to come back. The SAT. Snow. Snow. A little overextended, but could be a good day trade. These overextended stocks, don't rule them out for day trades. They make the best day trades, just not swing trades. Those are good VWAP trades because usually they accompany volume. Stock is up 6%. It's got volume behind it. Good day trades, not good swing trades. Overextended for a swing trade. Use a noodle. What I just explained to you was very important. I hope you guys are writing it down. Nvidia, nice swing potential. Not overextended, grinding up this channel. Matt, add this to your watch list. Needs to get above the VWAP, of course, but not looking bad at all. At all. Not at all. My neck is killing me today. GRAC. Oops. No, wrong ticker. Wrong ticker. Get it. PTSG. This one, public storage. Nice looking stock. Starting to get a little overextended, but not too much for a day trade. Let me. VRT. I really like this one a lot. I told my guys in the pit, I said I really like this stock. I'm like dying to get in on this stock for you guys. I may already be holding some. Let me just put it that way. I like the stock. I'll set an alert. Matt, add this to your list, okay? That is a beautiful stock right there. Okay? That is a beauty right now. If you're day trading, it's not a bad stock right now. Throwing it out there. Proactive broker. Ooh, Matt, you better write this one down. See, with the SPY coming up from the 8-day today, a lot of stocks are setting up as A-lines. So we have a very nice I'm telling you, I like what I'm seeing today. I keep saying that, but Kura. This is a biotech. This does not correlate with the market. This is a poor man stock. Okay, if you like those cheap stocks, here's an alert to the VWAP. We'll set it. Now, these stocks, I don't really focus too much on their overbought, oversold because they're not driven too much by institutions. So, cheap stock for you if you're interested. We try to appease everybody. All right, Apple. I like Apple. Now, notice something interesting. I like Apple and Nvidia. I have two mega caps on my list. And notice something interesting. Mags are not overextended. Not overextended. They're not here anymore, are they? Here now. Writing up this line. Let's just move this a little lower right there. line, writing this level right here. I like this. By the way, look how it bounced off our level, folks, that I drew for you 4 hours ago. Pretty good, huh? Make some money day trading my levels. Does anybody day trade my levels? No. Maybe that's a loaded question. But let me know. Let me know. Greg does.
Yes, sir.
He
Yes,
does.
sir.
Yep.
Yeah.
Rod does. Yes, folks do. Yes. Oh, okay. All right. I got it. People do. People do follow my levels. Okay.
Why not?
Why not, right? Okay, let's continue. Amy tries, Bruce does, HG, Mike. Good. Micron. Micron, I like Micron, and it's still not overextended. It was overextended. It's not overextended, but I wouldn't be chasing it here. There you go. Good, exactly, Richard, in combination with everything else. Tim uses them sometimes, only when they work. When they don't work, he doesn't use them. I'm just playing around. I'm messing around, Tim. I'm just in a good mood. That's all. Don't. I'm not trying to pick on you. Riot. There you go. Riot. Remember, I was telling you guys how I still like crypto stocks. We were looking at Bitcoin this morning. Raleigh, you must have seen it. I've been talking about it last few days.
Mm-hmm.
How we're above on the futures. They look pretty good.
Yep.
Thanks, Greg. And I still like it. I would like to see it above the VWAP, but I do like it.
You kind of have the same thoughts on gold as well, Roger. I mean, when looking at both of them, not the physical gold, but, gold stocks.
Yeah, let me just erase something. Something in the wrong place here. Yeah, physical gold is getting a little ahead of itself.
Yeah.
A little bit ahead.
I mean, it's at record highs now, and I read a report yesterday that some people think it's going to go to 5,000, Roger.
It may. Yeah. I don't predict where things are going to go. I don't really. It's never helped me make money.
No, it's not. It's just it's some of that noise in the background around gold.
Yeah. But what I will tell you is that it's respecting this level right now very well, and that everything's telling me that, including past history of 30 years, is telling me that it's going to come right back down here. Now, here's the problem. If it stays up here long enough, this will just continue coming higher and higher and higher, and eventually they'll become friends. Mm-hmm. But I don't. Usually that doesn't happen. They're more likely than not it'll come down here. Mm-hmm. And again, we're not talking about anything crazy. Sandy says PSTAG option a few days ago after you mentioned it, 28% return so far. Excellent.
Nice.
Actually, I'll tell you about jewelry. This is interesting. Diamond prices are the lowest they've been in, I believe, 30 years.
Oh my gosh.
Yes. I'm actually going to, I was joking with my wife the other day.
On your anniversary?
Well, no, it was our anniversary just the other day, but next year we're going to renew our vows. It's going to be 25-year anniversary. It's going to be a big anniversary. And my adult daughter's going to officiate it for us. She's a notary. She has a license to officiate. It's going to be pretty cool. I'll videotape it and I'll show it to you guys so we can all crack up and laugh at me getting married again to the same person at 55. But I bought her a really nice engagement ring 25 years ago, and as I became more successful, it grew into a much bigger ring.
Okay.
4 carats. I don't know, 3. It's a big ass ring. So she's now saying, I want to take that engagement ring you gave me, and I want to make studs out of them. The first one, the first one I got her.
Yeah.
So now I have to find a diamond to match the first diamond, so they match each other. So she has these huge earrings that'll be bigger than her ears, but that's okay with me because she'll be happy. But my point is, gentlemen and ladies, this is a great time to buy diamonds. The diamonds are at the last really low prices right now. Very, very. I was talking to my uncle about it. He thinks it's because of the artificial diamond boom.
Yeah.
Many people
I don't
have
know. Commented about that in the chat panel here, that the artificial boom is what's suppressing it.
Yeah. Yeah. So again, I don't know why, and I really don't care, but I'm going to take advantage of it. Okay, let's continue. Yeah, rock bottom, exactly. Rock bottom. That's another great song, Michael Schenker song. And if you like gold stocks, here's an interesting stock. Gold stocks, interesting. Gold companies and gold stocks, all commodity companies, they tend to move in rotations. The gold will make an all-time high. The gold will cool off. The stock will go higher. Then the stock will cool off. The gold, you might or might not have noticed that over the last several months. We've been seeing that. But that's not that unusual to see. But that's a pretty good moving stock right now. That's a pretty darn, yeah. Yeah, and to me, a real diamond and a fake diamond is just not, it's never going to be the same thing. But that's just my personal opinion. I've seen a few people wear them, and they are, I don't know if you've seen them, Raleigh, but they are breathtaking.
Yeah, they're actually better diamonds.
They look
like the clarity standard is higher.
Very nice. Yeah. Oh, yeah. I mean, they are just like amazing. But again, I like them. I have no problem with them. But it's just not for me. That's all. I'm old school. But man, oh man, if I was like 20 years old, 30 years old, getting married for the first time, I wouldn't even think twice. I wouldn't even think twice. I mean, they are beautiful. Their shine, just very, very beautiful.
Yeah.
Nothing wrong with them at all. All right, so those are my stocks. Now I want to show you a few because I was showing you yesterday the Pro Trader dashboard, and a few folks said that I went a little too fast. So I'm just going to go a little slower, and I just want to find you a couple of stocks and find you some options, and then we're gonna tune over to Kane. That's what the point, Gina. I would still know it's not real, and that's. Oh no, I would never try to fool her. No. I don't play that with my wife.
Yeah.
Too old for that shit. Oh. My wife and I've never been a big surprise guy for my wife. Like if we buy stuff for her, I'll take her and we'll do it together and I'll have her pick it out. So I'm just too fearful of spending a lot of money on something and getting it wrong, you know?
Yeah. All right, guys. Well, we have a bunch of stuff to cover here, Roger. Enough talk about diamonds, folks. Let's focus on what Roger is going to be sharing with us here.
Yeah, I'm waiting for this thing to fully load. It's taking a minute to load, but this is the Pro Trader dashboard, and I'm just waiting for it to load and for this to go all up. You could see that today we have a lot more stocks than yesterday making. Oh, there he goes. Making highs. So here it just took about it took about 30 seconds to load. But you can see it right here. And I only like to focus, on the main ones. I like to focus on the ones right here. I never counted them, but maybe the top 15. So what I would do is I would just put this here. Here's, I'm gonna just have you guys trust that I'm picking the ones from here, okay? I'm just gonna go and move this higher up here, and I'm gonna pick from there till we find a good looking stock, okay? Let's see how long it takes us, okay? Oh, well, right there. That's a beautiful day trading stock.
10 seconds.
It took me a second. That's the strongest stock right now, okay? Look on a daily chart what this thing is looking like, and look on a 5-minute chart what it's looking like. Now, I wouldn't initiate a swing trade on this stock, but I would very much like to day trade this stock if this stock happened to. I don't think I'd want to pull back to the VWAP. That would be probably too much, but I'll try it anyway. Here, I'll just go right here, right there, and we'll see what happens. But good start. Good start. Let's find another one. Let's go to the next one. PD. No. Blocked right there. 200-day. Let's go to the next one. Guess what the next one is? GLW. One of my favorite stocks right now.
You bet.
Do you see how long it took? So that was a stock on my watch list. Do you see how long it took this thing to find a beautiful stock?
Mm-mm. Instant. Really
Instant. Look at the daily. Look at the. Do you see why I use this thing day in and day out? It just finds the best stocks for me. And look at the 5-minute trend. It's beautiful. Again, beautiful stock to day trade. So let me tell you how I would use this right now, okay? So you see the SPY right here. This is the SPY. So what I would do right now is I would keep this and maybe 3 other stock, like this stock and the first one, which was ES. This one. Let me show you a really high probability trade. I would keep an eye on these 2 stocks right now, okay? I would just have them on the Pro Trader dashboard. I would have them right here. ES, and what was the other one? The other one was GLW, right? And I already have the alert set, and I know I like the daily chart. Here's 2 Pro Trader dashboards right here. I have my alert set. I know what I'm waiting for. Now, I'm going to forget about those stocks and move on to something else. Matt, can you hook me up?
Yeah.
Thanks. If I see right now a solo candle on the SPY, big red candle, and I see that it doesn't go anywhere, what it'll do is it'll push these prices down about 50, 60, 70 cents. And that'll give me a very high probability entry opportunity for us. Very high probability. Because the market, more likely than not, will just pull right back up, and this will come up and continue making higher highs. Thank you, sir. And continue making higher highs. Okay? So that's me giving you a couple of stocks to choose from. Another question was, well, what options would we buy? Okay, well, let's take a look. If you're taking those trades as a day trade, and if those are the type of trades I'm taking, I wouldn't go very far. I would go right here to the option chain, go 9 days out. There's hardly any liquidity here, but we can make it work. I would buy the... No, I wouldn't. No, there's not enough of an offset. Yeah, I guess I would. I would buy the 70, sell the 75. But I would need to do this for $2.50, and I can't seem to do that. So I would probably... I would just buy the 70s. I would just buy the 70s. I wouldn't mess around. I would just buy the 70s. I would do it. GLW, what I would do? I would go right here, buy the 86s, and then I would sell the 87s or 88s. If I sell the 87s, I want to make sure I pay no more than 50 cents. If I buy the 86 versus the 88, I want to make sure I'm not paying any more than $1. Any of these 2 combinations could be achieved. Any of these combinations could be achieved using what I just said. Any of those combinations could be achieved using what I just said. Okay. Now, here's the interesting part. I want you guys to pay attention. If GLW goes from here to here, and I initiate this option spread, by the time GLE goes from here back to here, that option spread will increase about 20 to 30%. That 50 cents will be now worth 70 cents. Now, if I just buy the option itself and not do the spread, I'll make about 5% on that trade in about 3 minutes with a probability of about 95%. If I buy the spread, I'll make 25 to 30% in the same amount of time. And my expense will be either 50 cents or $1 instead of spending $2. Rob, send me whatever question, unless you have something that's completely targeted to what we're talking about, send me an email. Okay? Very, 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 very important. Okay? And by the way, I used the 2 days examples. I didn't mean to. I meant to go right here, 9 days out. So in essence, it would be right here. GLW, right here. We would be buying the 86 and selling the 87. Same theory applies. Same 50 cents right here. Okay? Try doing the options. Try initiating some of these spreads. What is the benefit of doing these spreads? Every 7 or 8 days, if the stock doesn't go your way, you just roll it into another spread, and you end up paying half the cost. Your upside potential is much higher because you're not trying to make money on an individual option that costs $4 or $3 or $2. You're making money. You're trying to get the same leverage on a 50-cent or $1 spread. So, for example, if $1 spread goes up 20 cents, you're going to be up 20%. If a $4 option is up 20 cents, you're going to be up 5%. 5%, 20% lower risk. You guys understand what I'm trying to tell you? Are you guys understanding the benefit of these spreads? These are just debit spreads. These are just simple debit spreads. So you still make the 20 cents, but you'll make the 20 cents on a 50 cent or $1, not on $4 or $2 or $3. Adrian had a light bulb moment. So sometimes we'll have a move in. I'll give you guys a good example. We have time. CVS. Okay, CVS. So let's say you got into CVS today in the pit. Okay, this is actually a really good example. So let's say you went and you bought a option yesterday, went out, let's say 30 days, 23 or 30 days, and you bought a 0.70 delta. You would have bought a 75 call, right? And it would have costed you about let's just say 350, just to keep it simple, okay? Or you went out here and you bought the right here delta, and you bought one for $4. So you either spend $350 or $4, right? Okay, look at the two scenarios, okay? Look at trading. Thank you, as well as all. David, this is something that other people would really want to read, so I'm going to repost this. Yes, so I'm going to show you a real example, folks. A real example, okay? So I gave you CVS yesterday, okay? The majority of you went 23 days out or 30 days out, and you bought the 70 delta, which would cost you $3.50, or it would cost you $4. Okay, just let's use those two numbers. Let's just say $3. Let's just average them, $3.75, just to keep it simple. Okay, okay. This morning, so we bought yesterday. We bought CVS. I want to show you this example. Perfect example, actually. I don't know why I didn't think of it earlier. So look. Okay. We got in at 72.32. Okay. And we got out at 77.88. Okay. So 32.88. How much is that? That's it's about 55 cents, right? We held on to the trade. We held on to the trade for about. We got into it late last afternoon. We got into it at about 2:30 in the afternoon, and we got out of it about 10 minutes or an hour after the market opened. Okay, 56 cents. Thank you. Okay. So now, let me show you something. Instead of spending $3.75, look what you could have done. Could have gone right here, right here, right here, and you could have bought the 161 right here, and sold this one, the 78. Bought the 77 and sold the 78, and this would have costed you 40 cents. 40 cents. 40 cents. 40 cents. Okay? How much do you think the spread increased when CVS went up 56 cents? How much do you think it went up? It went up about 20 cents. That spread went up about 20 cents. You spend 40 cents and you made 20 cents. Most people would have made 40 to 60% profit on that trade, instead of making about 30 cents, which would made about 5 to 10% on the trade. See what Raymond just said? I made 3-ish% on the single trade. Exactly my point. Now, I still like CVS, and if you're still holding it, that's fine. But do you see the difference? Big difference. Big difference. and your cost would have been 50 cents, not $3.75. Do you see the difference, Raymond? You guys understand? Do you see the difference? So imagine how much, 3 cents, you made 20 cents, 15, 20, 30 cents. Less risk, higher profit target.
Yep.
Yeah. And let's say it didn't work out. Okay, you spent 50 cents. You didn't spend $3.75. 9 days later, if it doesn't work out, we can roll it over again. And then we can roll it over again. So I'm just saying it's 2 point. That's what I'm talking about. See, folks, try doing them as spreads. And by the way, I don't have a problem with here's CVS. I love the stock. The stock is looking beautiful. You could keep holding the stock. I still love the stock. There's nothing wrong with the stock. But again, I just wanted you to see the difference. 2035430. What is your name? Can I call you by your name? So does the Pro Trader dashboard give spreads? All right, let's continue. All right, so on that note, and talk a little bit about GEX. Kane, are you going to tell us a little bit about this today?
Yeah, absolutely.
Yes. So, folks, I just wanted to show you the best way, how the best to utilize the trading pit. I wanted to show you some really good spread examples, and I wanted to show you good examples of how to do debit spreads on the cheap and get maximum profit potential from them on a small move. Because you're not trying to make money on $3.75 anymore. You're trying to make money on a 50 cent or a dollar move. Do you see the difference in the leverage there? See that? 4% here is 20-30% here. All right. I'm going to go ahead and close the chat, folks. Kane launched something a little while ago. It's been a very, very popular item. It's been doing very well. People have been very happy about it. And today, Kane and I are going to talk about it again. If you don't know about the GEX terminal, if you haven't seen the GEX terminal, I highly recommend you pay very, very close attention to this, okay? Please pay very, very, very close attention. And by the way, just as we're speaking right now, SPY is starting to go a little bit down. If it hits the VWAP, there's going to be a lot of stocks that I'm going to be looking to buy. I'm going to go on a shopping spree. All right, folks, this is a breakthrough that automatically tracks all of Wall Street's largest option positions in real time and generates an actionable alert for you, option criteria included, before the stock retreats. Very, 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 very cool. Now, we develop tools and strategies to the best of our abilities, but no one can guarantee the future. I have a crystal ball no more than 2 feet away from me.